What's going on, everybody? All right, so today I'm gonna teach you guys a new indicator that I found. It's kind of related to my EMA strategy and trendline break, but this is for like short time frame, so you can catch the move faster than the previous EMA strategy that I have. Because my previous EMA strategy, I was relying on 5 minute, 5 minute, 15 minute cross, and it was 9 and 21 EMA with this new indicator, which I'm gonna show you. Um, it's gonna be called type EMA, and you see EMA cross. Click on that, right, and this will show up here. EMA cross 9. It uses 9 and 26 EMA. Okay, and then you're gonna have this cross symbol that pops up. So this is what's gonna show you when it pops up. You see a red or a cross. It depends how you want to set it. You can set it as a cross symbol or a circle symbol. I set it as a circle symbol, easy to understand. You can change the color too, so that when it pops up, it's more visible. And then you can take these to uncheck these. On default, those are checked. Just uncheck those, so you don't have to see anything. So I'm gonna go through it and how the steps, what I look for, and what's the pros and what's the cons. Right. Today the market is still open. I made 900 today on top step funded. Sorry, top one futures instant sim account. Right. If you guys don't know, top one futures offer an instant sim account, so you don't have to do evaluation. You just gotta pay for a higher price for the account, and they have a 20% consistency rule. And then they also have like a target you have to hit before you get a payout. Plus, it's 10 days before a payout. So there's a lot of rules, obviously, but it's just for convenience if you want to skip the evaluation count. If you're more seasonal trader, there's no reason to keep trying to pass evaluation count to hop on sim account. You want to trade and get paid, right? So this is for the people who already has established a good trading strategy, good plan. I do recommend using any of these sites that offer the instant fund account. Top One Future is one of those prop firm future that offers that. So if you guys want, it's in my bio. Go ahead and click, check it. They offer a discount too. Every day there's always some kind of discount, 50% discount. So check it out. Okay, now back to the strategy. Okay, so let's. The market's still up. The market's ripping right now. Oh my god. So just like any strategy, you want to go market high time frame and mark your levels, right? So let's say my 15 minutes time frame. This is part of my high. Obviously, it's resistant, but right now, hindsight, it broke the resistance, and then lows, right? So this is part of low. Okay. You want to have some kind of levels going on. Okay, and then you want to hop back into at least then you see a trend. So you want to mark that trend. I'm going to erase that. So you see a downtrend. Okay, cool. You mark that downtrend. Where's my trend indicator? Let me get the ray one out. There we go. Let's say, okay, there's a downtrend right here. All the way down here. You want at least 2 or 3 touches. That's a downtrend. That's a 15 minutes. Okay, cool. Now let's go back to 5 minutes. Is there also another trend in 5 minutes? Yes. Here's one more right here. Let's say this is the trade I took. Okay, so I'm marking how I took it. I didn't take any of these trades. I'll explain why. There's also pros and cons. Okay, so I see 50 minutes and 5 minutes downtrend. Now I want to go back to the 2 minutes. The 2 minutes where it's going to appear. Oh, also, sorry. Let's go back to the settings so you don't get all confused. In the visibility, uncheck all of these. Leave the 1 minute to 2 minutes. So that's the only time you see this indicator pop is in 1 minute or 2 minutes. Okay. Other time frame, it won't show up. So if you go to 5 minutes, 15 minutes, it won't show up. Your other EMA will show up, but not the EMA cross. So you won't get an indicator. So right here, I have two trend lines, the downtrend, right? So we're looking possibly for a break of that trend line and go long. In the 15-minute, this is a 15-minute high time frame, it broke here, right? You could definitely took a long here because it broke, have a stop, okay, you're good. But you don't see you miss out on on the move, right? Because it happens sooner than that. And what the shorter time frame would do is give you a faster print, faster indication of a trend change or EMA cross. That usually mean a trend train. And this is the trend line I have for the 5-minute. And obviously, right here it broke out. We also saw a print. See this print circle here? That print shows me that this bullish EMA cross. That's a bullish EMA cross. When you see an EMA cross downward, that's a bearish EMA cross you want to short, right? But right now we're looking for a break of trend to go to the upside, because that's what the market is telling us is support right here. Obviously, it can continue to buy up, and then we're not jumping in yet, right? We're waiting for a confirmation. Here's the confirmation. This will print out, and once that print out is solid, it's your chance to enter long. So this is where I enter my position long. Well, I think pretty much sure this is the candle. Once they print long, your stop could be either the candle low, or you want tighter risk, that candle low wick, right? That'll be your stop. Usually I go with next candle or another candle. So this will probably be my candle stop. And then you want to target at least 1 to 2, 1 to 3 is the reward, right? In this case, we got the 1 to 3. It hit and it hit more, like you would have instantly profit, right? That's entry, that's stop, take profit 1 to 3, and if you want to trail up longer and take more, you could have, right? You could just trail, and then take profit. But the point is, at least 1 to 3 is always good, because you never know when the pullback will happen. You do know there is resistance up here, so even if you say, you know, I'm gonna target that resistance, bang, you would have hit, right? Because that was your previous level resistance. You think this rally will continue up, at least hit towards resistance, you would have made money. So that's a positive of this indicator. It gives you an earlier print of when to go long. So what's the negative? The negative is pretty simple. You get a lot of, if you just stick to the 2 minutes and watch it all the time, you can see a lot of print. Here's the print going short, right? Okay, cool. You would have made a little bit some money going short here. Great, right? Let's see another print. Here's a print here. It's telling you to go short too, but you probably would have stopped out. Let me hop on to those. Okay, this print short. Like I said, stop there, at least 1 to 2, 1 to 3. 1 to 3. That's good. And that would yield some return too. You didn't get stopped out. So okay, cool. That's 1. That's 2. That's 3. 3 winning so far from that indicator. Here's one more that I found. Okay, this is telling me to short. What happened there? Well, you would have lost. Let's say you short, that's your stop. It never materialized, right? You would have got stopped out. You lost in that trade. And what happened? Well, you saw a trend break in a short time frame, and it print short. So you took the short from here, right? You think, okay, maybe it'll come down to here. But what happened? It never did. It stopped and came a little longer. It stopped you out instead. And that's going to happen on the shorter time frame. If you just look at short time frame and look at a trend break in a short time frame, you might get slammed with stops and hurt. It sucks when the market, it needs volume, obviously. And if it's choppy, choppy market will always hurt you, no matter what kind of strategy you use. So that's one negative thing about this indicator. 'Cause in this shorter time frame, you see a lot of prints. Like here, it's printing short, and here it prints long. This long would work out, hindsight, but it did, right? So I say you long there, and then you short, and then your stop is around here or next candle. at least 1 to 2, 1 to 3, you would have got some money there. You would have made money there. So let's see how many times it loses, how many times it wins. Just so you see the effect. Now this one's obviously a loss, right? Stopped out, nowhere. That was a short. This long, you made money. How about here? This 2 print going short. This is obviously a loss. Print short. Okay, here's a short print. It was a choppy market. You shouldn't be short anyways, but let's say you did. You would have stopped out and lost because it never went 2 to 3. It just barely, right? And it's a very small number. Most people are not just taking profit there. They're waiting for at least down a little bit further more. So let's say that's an L because you would have stopped out. Let's see what else. Where the print. Here's a print that was good. Here's a print for short. Okay, you see a print short. Short time frame is right here, and at least 2 to 3. This would have yielded you some profit. So that's a winning trade. Here's another one. It's telling you a long. What happened? That's obviously a loss, right? It's telling you a long there, and it never materialized it. You would have stopped out. Let's say your stop was there. That's a losing trade. Okay? And even because it's a short time frame, you're like, okay, look, a short time frame. Look, the trend break upside, print long, I'm gonna go long. What happened? Even short. You see what I'm getting at? So yes, it's effective, and then there's when it's very ineffective. Like here's a bunch of print. This is like where you don't want to be caught at. Like when it trends like this and you just looking, you see a bunch of flashing indicators go in one direction, another direction, but the market really is just chopping. So understanding the market's dynamic for the day also help, right? If you're in range, tight range like that, you can't take any trades. You have to look for a high time frame. That's why I always go to high time frame first, right? See where high time frame is at. And then go down one further down to a 5 minute, see the next trend, and then wait for your indicator pop up and then do your trade. Okay. Also, be patient. It's gonna come. The print will happen. The Ema Cross will happen, and then you can participate on that short rally or that shorts. That's basically it for this indicator, right? Market had a very choppy day. If you were in it, you probably lost. It opened up in a short. That was the best time, but then that was hard to call out. It's hard to find out. If you were on the indicator, it did give you that print, but like I said, market opens, volatility happens. It's hard to play, but they did print a short, right? So that's one for usefulness of this indicator. It gives you an earlier print to go long or short, but beware if you're in the choppy market, it could really stop you out. You put you on tilt and you just blow an account. So the best way to play it, it's like high. Look for a trend change in the higher time frame, 15 minute, 5 minute, stuff like that. So even if they say the early open, we saw a big trend up, right? This was the trend that was going early open, and then it started seeing trend break. Let's see what happens here. Let's go to 5 minute. Okay, we see the trend right there. Trend break. Okay, now looking bearish. So we're looking for a bearish setup. And then market is open. Volatility comes in. Volume comes in. Anything can happen. But if you were just strictly playing the indicator, you would have seen, okay, waiting. There's a couple prints here, but you're not taking it because it's choppy. If you've seen a break, look for a bearish setup. Okay, you see this. Okay, let's say you missed it. You don't trust it yet. It came back up. You're like, all right, so you don't trust it. There was a print to go long here, but there's also resistance up here. So The risk to reward, not that great, right? Not that great. So like, I'm gonna hold off. And you also see, remember, you draw another trend. Here's the trend down that is going. So you see it came up here, but there's presenting a resistance on this trend line. All right, cool. Next thing you know, you see a print short. Ema Cross 2. You're like, okay, this looks better. The trend is down. I got to pull back up, but it got hit resistance. I'm going to take a shot at shorting early. That will yield some return. Okay? It's simple. Just look at market structure. Make it simple for yourself. Don't overcomplicate things. For people to use trendline, I know I have a student in my group that uses trendline a lot. He likes the strategy because it's simple to use. This is one of the things he could add to his arsenal that will help him a lot tremendously. I think. Let's see. Let me change. Let me take this out because that's what's screwing this up. Yeah, visibility. You don't need to see on the 1 minute. So it's 9. You don't need to be in a 2 minute either. Should be on the 5 minutes and 15 minutes only. That's the only time I want to see it. There we go. So here you see the EMA, the 9 and 21, 9 and 26 EMA. A cross will give you a print. See that print? Zero, the circle, the circle, the circle. EMA cross bullish, EMA cross bearish, right? That's it to this indicator. Hope you like this video. Give me a thumbs up. Subscribe for more. And if you have any questions, go ahead and leave me a comment below. Peace.